Good day, everyone, and welcome to the video newsletter for Friday, June 7, 2013. There's lots to get into, so let's get into the fundamentals right away. The Nikkei was up last night, one of the first positive closings for the index in a very long time. The U.S. stock market has been following the Nikkei during the last several trading sessions and continues to do so with great accuracy. Before I turn in every night, I check the Nikkei to give me a good idea of how the U.S. stock market's going to open in the morning, and I suggest that you do the same. Yesterday, investors were speculating that this morning's unemployment numbers were going to be in line with the economy, and the market rallied towards the closing bell yesterday. This morning, the report beat expectations after the government reported that employers added about 175,000 jobs last month, slightly more than expected. More people started looking for work. Today's rally in the stock market shows that investors are still expecting the Feds to continue the stimuli for the next few months. Looking at market internals, on average, 2 stocks rose for each declining stock during today's trading session. I mentioned a few days ago when markets were dropping hard that the internals are still very much bullish, and what looks like a major correction is just a hiccup or beginning of a consolidation period. Well, we've been in a consolidation period now for almost 2 weeks. I do not believe that this market is going much lower. The reaction from hitting the 1598 support level was a strong jump, and we will see if this is a dead cat bounce or a meaningful leg back up to take out the high price. Looking at the intraday view of the stock market, you can see that the index is up a few points above the expected resistance area. I'm planning on selling the SPDR ticker symbol SPY if in fact the stock market breaks the resistance level to the downside on Monday. I believe the market is going to come back down as I previously thought and continue a trading range with an upwards bias, just as it's been doing the last few trading sessions. I would wait till we trade below this resistance level just to confirm before initiating a short position. I wouldn't be surprised if we started Monday a bit higher and dropped back below the resistance level once again. Looking at the daily chart view of the index, you can see how the upper daily price hits the downsloping resistance area. I anticipate this to continue unless some unforeseeable news comes out. While the market makes traders feel very emotional when there's a 200-point rally moving upwards, you have to consider the big picture and the fact that the stock market only trends about 25% of the time on average. These 200-point rallies are not everyday occurrences, and I think we will correct on Monday. One market that looks ready for another decline is the gold market. The futures market broke the low today, and the stocks are following in the futures footsteps. Beginning of next week, I will outline some gold relative strength setups so we can once again sell the weakest positions and buy the strongest positions in the sector. Stay tuned for that next week. I may also do the same for the housing market, as many of our readers have been asking about that as well. Looking at our existing positions, MGA is just doing terrific. The stock hit a new high price. There was finally some institutional buying coming in. I've been waiting for that institutional buying all week, and finally it came into the market today. I'm going to hold this position till about $70, and hopefully we'll get there within the next few trading days. The other position we're holding is Pfizer Pharmaceutical, ticker PFE. The stock rallied very little in light of the fact that the market rallied 200 points. I'm still holding the position short and encourage you to do the same. We should start seeing some fun selling if the position doesn't rally within the next few days, and I don't think it will. My profit target is 27, and we were almost there a few days ago. We have to be patient with profits, and that's what we're doing right now. But I do believe we're going to hit the $27 level very shortly, probably within the next few correction days. There's no setups for today, so enjoy your weekend and get lots of rest. The next week is going to be very volatile. I suggest you watch the resistance level on the intraday chart of the SPDR for the next possible day trading opportunity once we break below the resistance level again. Have a great weekend, everyone, and I will update you late Sunday or early Monday.